Coming up today, Nvidia blows out the numbers again, showing the AI party's still alive. Jensen says the haters got it wrong. Snowflake rips higher. Tesla falls lower. A $5 million Trump gold card. And did Nvidia just save the market? It's a big day, guys. Let's go. And welcome back, everybody. On this very eventful day in the markets, we just got earnings out from probably the most important stock in the market, Nvidia, the leader of the AI boom. Indeed, coming in with a beat, 89 cents per share. Just looking at after hours trading here, stock did whip around a bit straight away. However, as I'm currently speaking, it's only up a little bit over 1% here. And stick with me today because we'll come back later on and see how it continues to trade in the post-market here to give us an idea of where it may open in tomorrow's regular session. But as it stands right now, quite a muted response. Option dealers were forecasting a 10% move either up or down. And so far, they look to be like the real winners out of this news, as we're not really getting a big move here. However, just to give you a quick summary of the numbers, beat analyst expectations, revenue up 78% year over year. Again, that is absolutely mind-blowing numbers for a $3 trillion company on the market. Gross margin, 73%, printing more money than a bank. And as I also thought yesterday, guided up on their revenue as well, in addition to continuing to show good growth. Announced a quarterly dividend, penny a share, already selling billions of dollars worth of Blackwell, with Jensen saying demand for Blackwell is amazing, as reasoning AI adds another scaling law. Increasing compute for training makes models smarter, and increasing compute for long thinking makes the answer smarter. He went on to say AI is advancing at light speed as agentic AI and physical AI set the stage for the next wave of AI to revolutionize the largest industries, something I've been talking about a lot as well. And kind of what got me really focusing on robotics since the start of this year was Jensen Huang himself saying that's where he thinks it's going next. But going into this event has been a lot of doubt, DeepSeek, mega cap tech, capex spending, which I think given this result and forecast guidance, of course we're just making our way through the earnings call in which the market could still turn. However, initial reactions look pretty good based on the numbers and guidance, and either way goes sharply in the face of the critics and skeptics of late, who've been claiming we've already seen the peak in AI spending and AI adoption, whereas I still think we're in about the third or fourth inning, and who knows, maybe even earlier, as AI is no doubt revolutionizing just about every single industry out there. And like we said a few weeks ago, Jensen Huang also believes that initial reaction to DeepSeek, all those people who believe DeepSeek signaled the end to Nvidia's dominance were wrong. He believes their innovations will lead to greater demand for AI hardware, not less. Something we've been arguing for as well. Any technology that gets cheaper, it gets used more. And here's a look at the numbers from their latest quarter. 12% quarter over quarter growth. That is very good. 16% in data center. Those huge margins, showing competitors haven't been able to catch up for them, and just how much this company has changed over the years. I always remember Nvidia from computer gaming, where they've long dominated in graphics, and we can just see over the last 10 years, gaming was the largest segment of their revenue here in the blue, for many years making up over half of their revenue. 2019 data center revenue here in the green was a quarter, and that's absolutely exploded over the last couple of years, now making gaming revenue not even 10%. Here's another interesting stat for you. Nvidia's revenue since 2023, just the last 2 years, is greater than the previous 24 years combined, their entire time on the market. And just looking at some reactions from the street, Dan Ives, Nvidia, another robust beat and raise. No weakness in AI revolution demand. Blackwell demand insane. Tech will digest this and be very bullish on derivatives. Conference call key. And so that's what's currently happening right now as I speak, the conference call, which we can get some big moves out of sometime. However, as it stands, still trading a little flat here. And just looking at the semi sector as a whole, it's also trading up a little bit, along with the Qs as well. NASDAQ up almost 0.5% post-market, as we just got another tech company come in with really good numbers as well. Snowflake, beating analyst expectations on the top and bottom lines, also guiding up, and market very pleased with that result as well, up 11% after hours. We also just heard news from Alibaba today, making AI video generation model free to use globally. Seen a big push from China into AI this year, along with their government's full support, really trying to compete with the American. They dropped DeepSeek on Trump's first day in office. Now Alibaba is saying it's open sourcing 4 models. And it seems all this news out of China is getting the market excited for Chinese stocks again. Alibaba having another good day, up almost 4%, trading up after hours as well, and continued strength across many other Chinese securities. Not doing so well, Tesla, still trading lower again today on the back of negative sentiment, controversy with Elon Musk. To me, it's kind of amusing. He's trying to clean up government spending as kind of a side project that I think will actually help all his companies in the long run. run. But no doubt we do have a bit of weakness in the European market. However, Europe only makes up for about 12% of Tesla sales. Not really a big market at all. Much more important is Asia and North America, where there's still growth in the world. Like I said, they're holding up just fine. Many consumers waiting for the Model Y. But these negative headlines do create good opportunities for long-term investors. Stock almost getting down into my buy zone here, around 280 to 265, where we've previously found resistance before. I'd love to pick up a few more shares there. However, I don't know if I'll get so lucky to add some more in the 220s when I last did after the Cybercab unveil. Moving on to the market, S&P 500 was rather flat today. Bit of a spinning doji here. We did trade up and down. Still quite a bit of softness up the front, although we did get a little bit of a bounce in the growth momentum high beta names, like we can see in the spread here. Got really oversold there yesterday. But just looking at some key stocks, not the most convincing reversal candles. Actually a bit of indecision, which can mark reversal points, but can also be pauses in a trend. There's Palantir, similar look for DraftKings, a little bit better for Hims and Hers, and Robinhood as well. Just looking at some leading stocks, along with the nuclear trade Oklo, Vistra looking a bit better, but still quite weak. Crypto, there's Bitcoin trading down again today, hitting 82,000, along with Ethereum coming down, testing these support zones around 2250 here. And the meme coins been a bit weak of late. There's Dogecoin, are getting some reversal signals here, quite a lot of bullish seasonality. And just looking at the spread of the BlackRock Bitcoin Trust, IBIT versus the NASDAQ Qs, we can see crypto is a bit oversold versus tech shares here. So if we are going to get a bounce in crypto, that could happen soon. It might actually be a swift catch up if the market does trade firm tomorrow on Nvidia's earnings and is checking back in with Nvidia as I speak. Still just bumping around here, only up 1% after hours. And so just moving on, not only investors, but a lot of consumers feeling gloomy, anxious about the future, bombarded with headlines of tariffs and inflation. However, I'd say this is more political than anything. Looking at the underlying stats, the economy is still fine. It's not fallen off a cliff. As many people wish it were, it's just simply not the case. But confidence and sentiment is a little weak as we're still making our way through the thick of new global trade policies. Trump's going to put the squeeze on the European Union, many countries charging higher tariffs on US goods and vice versa. Also looking like we're going to get a big deal between the US and Ukraine for minerals, which could also be deleveraging from China, but also looking to get some reimbursement from the hundreds of billions of dollars US taxpayers have sent to Ukraine. And so they have a bit of rare earths, which is currently dominated by China. So this will also play well into a deal with China. And again, a new program being proposed, $5 million gold card that would grant foreigners US residency, which I think is a great idea. I've had a lot of people over the years say things similar to this, wish they could just pay a fee to get in a much more simplified program, as there are other ways to get residency in the States, a lot more complex and longer process, but this will no doubt raise new revenue. Just 1 million of these new gold cards would raise 5 trillion. So if in other words, they sold 3.5 million gold cards over however many years, that would pay off about half of all America's federal debt, 36 trillion, which could also mean, and it's kind of hard to believe because it's been so long, the US government budget could go into surplus. They actually make more money than what they spend each year, which would drastically reduce the need to sell bonds to the market to make up for the shortfall in the deficit. As we continue to see yields slide here, 425 in the 10-year, but if the market were really worried about economic growth, I would expect to see high yield bonds sell off. They're not, they're actually trading up and firming up near highs here. In addition to inflation expectations continuing to come down, as measured by tips, and in the spread of commodities versus treasuries, having a bit of a swift pullback, in addition to crude as well, starting to get close to technically oversold territory. But with what we've just seen from Nvidia, the AI boom still clearly well and alive. If PCE inflation comes in Good Friday morning, we've had yields pull back, oil pull back, the cost inputs into the economy getting cheaper, it could set up for a nice bounce in the market. And potentially the Russell 2000, which has a bit of catching up to do as well. Been stumbling along for a few months here, along with the equal weight S&P 500. Most stocks out there still a bit off their highs. And we can see from the VIX, the market's still a little nervous. However, we haven't been able to close above 20 this last week, so rather subdued and a bit mixed for mega cap tech. Alphabet technically oversold there. Apple pulled back a bit there today. Microsoft still trying to find a bottom and a little bit of a bounce up for Meta. And we did get some good news out in the robotics world today. Hearing that Amazon plans to invest $25 billion in robotics-led warehouses, cut costs, and compete with rivals like Temu. Amazon's AI-driven warehouse automation could save $10 billion annually by the end of the decade. They're also investing in robotics talent as part of a broader push to deploy AI large language models in its warehouse robot. This is exactly what Jensen Huang's talking about, the next stage of AI, going into physical agents, robots. But this is nothing new for Amazon. They've actually deployed more than 750,000 mobile drive units since it acquired robotics startup Kiva Systems in 2012. And one related robotics stock involved in warehouse automation, Symbotic's been pulling back and consolidating for a while. Market cap just under 14 billion and revenue is fastly growing. And just looking at other robotics stocks today, did get a bit of a bounce there. Same with the nuclear trade, a little bit in batteries and space, but we're still making our way through back of Q4 earnings season on quite a few of them. Got SoundHound AI earnings tomorrow, and the quantum trade still consolidating somewhat. And just getting back to Nvidia while I speak, actually gone slightly negative, trading a little flat here. We also just heard Jensen say nearly every automated vehicle company is building on Nvidia, with the AV robotics market set to hit $5 billion this year. Also looking at some other commentary from analysts, Gene Munster. Jensen is emphasizing the need for more compute heavily. He says the amount of compute required for reasoning is 100 times greater than for one-shot prompts. Next generation inference and reasoning may require thousands to millions of times more compute than what is needed today. His take, those numbers are so big, I don't know what to make of them. But I agree, robotics, everything being automated, AI driven, requires huge amount of compute power and data centers, and along with that, the electricity needed to power them. And that's why I think the nuclear trade is a secular trend, not just this little passing fad in the market at the moment, but something that's here to stay and ramp up exponentially for many more years. And of course, we're going to have bouts of consolidation, volatility, and pullbacks. Who knows, maybe even a bear market recession for a year or two. But the secular trends will still be in place. And speaking of uranium, has been pulling back of late, potentially offering up by the dip opportunity here. So we are getting technical signals. It may be ready to turn. Looking at the Global X Uranium ETF. Uranium miners as well. Looking at the Sprott ETF, getting good technical signs here that it's oversold. And with a dividend yield of 3.62%, that's pretty good for a high growth industry and is actually well above the dividend yield on GDX, 1%. Jensen went on to say, we are just entering the era of AI agents, followed by physical AI and then robotics, which will be the largest of them all. Sounds like Musk and Jensen may share the same long-term vision for Optimus. Jensen a strong proponent of Elon Musk because he knows he's probably going to be his biggest customer for many more years, not only with XAI, but also with Tesla, Optimus Bot, robo-taxis. All these things need a lot of compute power to run. But as we make our way through the earnings call, market continues to trade flat in its initial reaction. Like I said, after earnings, it can whip up, down, all around. Same off the open tomorrow. So we won't really know how the market feels until this time tomorrow on close. Because right now at 1:30 after hours, that's the same price it was at in June last year. But in my opinion, the market's definitely got reason to find its footing and have a little bounce here, especially in the growth theme, as the biggest leader of growth is still well and truly growing, along with guiding up, along with a lot more potential around the corner going into the robotics revolution as well. But as we can see in risk-sensitive assets like Bitcoin, sentiment is still weak, still plenty of bears and skeptical people out there, but nothing changes people's minds like price action. So if we are able to find a bottom and bounce and trade up, that could really feed onto itself because I think the fundamentals are there for it. Along with the potential for PCE inflation to come in better than expected on Friday as well. And the sharp pullback in yields is just making the earnings yield on stocks more appealing. That's all I got for you today. Let's see what happens tomorrow, and I'll break it down for you once again. Cheers.